So we're going to talk a little bit about scanning and things like that. At night, usually all my charts are set up and I know what I want to watch the next day. And a lot of times they're not going to set up, they're not going to do what I want, but I have all my support and resistance set out so that I know if it's getting stronger or weaker, where my price targets are at and which direction and who's kind of in charge, bulls or bears, so that I have an idea of what would be best for me that day. So just because I call something out like, oh, I want to go long, optimally I want to go long if the chart on the dailies is setting up that way. But if I open up intraday and it looks different, then you got to go the price action. So today I woke up a little bit. DCIX was not on my watch list at all. It was just something that I picked up off my scanner, and as you can see, it already moved pretty good. I watched it for a minute or two, and it was above all the VWAPs, and it was climbing up the 9 EMA, and it was doing a pretty good job. So I got in right here, and I watched it come around. Right there, I consider getting out, but it was still holding that higher low, and it came back and made a little bit of a lower high, but it started to make a little double bottom there, and it held up. So I decided, well, I'll go ahead and hold it. What's the worst that can happen? So it got to ramping. I got on the conference call around this time to listen to the catalyst and see what the earnings were going to be. And it came down and it was still holding indicators. I like 9 EMA, 20 EMA, 50 simple moving, and all these are on a 1 minute. Every time I click it to a different moving time, it'll change the moving averages with it. So I started not liking what I heard, and it gapped up pretty good, and it started hitting a lot of resistance. I started to get out right there. You can see I top ticked and got out at that next candle 1 minute before the open. I debated holding into the open, but it was just too bad on that candle, and it was gapped up, and I could have missed out and it could have ran a lot, but I was pretty safe with that, and I was willing to get back in. Now at this point, I also didn't have any shares to short. When I saw both of these wicks, I was totally okay with shorting. I wanted to see it break down through here, and it tested it. In the next candle, it tried, and it's got another nice little tall top wick, and it pretty much confirmed, and that was it. Right there, I would have definitely got short. Guiltily, though, as it broke down past every indicator, when it got into right here, with that nice little long bottom wick there, I debated on going long again. And I'm kind of glad I didn't, because it didn't really go anywhere. It never got back over into the indicators. I definitely would have got back out as it got into here. It was starting to let go. But if I had had shares to short, I definitely would have shorted from there. So I made, 22% on money risked for an hour and 14 minutes. And if you're watching your indicators and you're watching your scanners in the morning, it's not always plays like this, but a lot of times if you've done a lot of study and you know what charting looks like, then you know about how far something can run and when you should kind of get out. Well, those candles told me I should pretty much get out. These candles told me that I had a pretty good chance of it holding up. It was pretty strong, and if you want to look at the dailies, it really wasn't up all that much to form a runner. Or actually, I think it was a reverse split. It's not a form a runner at all. It just, that's it. It was just decimated in one day, and it bounced and it was decimated again, and little bounce, little bounce, little bounce, little bounce. So I hadn't expected much. So they had some crazy price target of $18 per earning per share, but that was only because they just reverse split back there and the earnings came after, and somehow they kind of massaged numbers around, cleared some debt. So to me, as I was hearing them talk on the conference call, it just wasn't worth hanging out with it. And as you can see, 22% on your money, that's not too bad. The more you risk, you're still making 20%, whether you risked, $5,000, $10,000 or $100,000, as long as you're comfortable with, your moving averages and your charting things that you use to indicate when you should enter and when you should exit. It's pretty safe. So right here, I really was risking off of 56 and I was in at 66. So I probably would have exited right here anyway at 60. I really was risking about 5 cents. From the time I entered, it never really came back. It might have dipped I think 1 cent on me and just totally went off from there. So that's the power of charting. We'll talk a little more in another video about moving averages and how we use them. But this was just something that was grabbed off a watch list. And once you're totally comfortable with your charting and how you do things, you can feel confident to enter things like this. And do I always win on these? No. Sometimes, you're going to take that test and that little top tick right there, that's going to be it. It's going to come back and it's going to test and it's going to start to break down. But what's worth, 5-10 cents of risk to gain, 2% on your money in an hour and a half? It's worth it as long as you know what you're doing. So